What's up, traders? Probably you are day trading on 15 minutes on USD CAD and you said that, well, the market is dropping. There is a big break to the downside followed by a consolidation and deceleration. So this is a nice downtrending market. So you found a selling opportunity. You sold USD CAD from here, keeping your stop loss here, and maybe you took a big profit target. As soon as you open the trade, the price started to reverse and stopped you out from the trade. You are puzzled. What happened? Why this happened? As soon as I opened the trade, the market started to reverse. Now the missing piece of the puzzle is multi-time frame. Now what happened is, what you saw that the market is creating a downtrend is basically a piece of a retracement of a big uptrending market. And where you have seen the price just been reversed is where the weekly gap level. So to understand this kind of movement, to catch this kind of big trade in the right direction, you need to apply multi-time frame approach in your trading. So this video is all about understanding multi-time frame analysis, and at the end of the video you will be able to find the profitable trading opportunity using multi-time frame analysis. Sound interesting? Then let's get started. So first let's find out how to start with multi-time frame analysis. I saw that many people discourage about weekly and monthly time frame analysis. Now people think that it's a higher time frame, monthly, weekly, it's a big time frame. Why should I consider in this lower time frame? I want to get a quick trade and want to get the profit quickly. But in fact, the monthly, weekly support, resistance, trend line and other area of value can give you a huge advantage in your lower time frame trading. Even if you are day trading, this level, this area of value can give you a big advantage in your trading. So how do you approach multi-time frame in that case? Let's do a step-by-step guidance how you can apply multi-time frame analysis in your trading. Now keep in mind that multi-time frame analysis is not all about candlestick pattern, not all about technical, but about timing as well. So which time of the week, which time of the day, what kind of price action has been created is very, very important. Let's say you see that this is the weekly candle, okay? Even if you are trading on 15 minutes, you need to look at the weekly candle as well to see how weekly opening, how weekly closing is affecting in your trading. This is the weekly candle. It's a bullish engulfer has been created. As soon as this candle close on the new trading week, so there is a new weekly candle has been created with a gap opening. So once you have seen a weekly gap, okay, so the day you are trading, the first thing you have to do, draw a level on this weekly gap or a zone. So this is now a hot zone for your trading. So once you have seen this gap level, go to the lower time frame. Let's say now 15 minutes you are trading, right? Go to the 15 minutes time frame. Now the next thing you have to wait to see a pattern in this zone. So because you have seen this is an overall higher time frame uptrending market, either daily or weekly, this is an uptrending market and there is a weekly gap opening. Now if you are trading on 15 minutes, then you need to see an inverted head and shoulder or a big reversal pattern and a strong bounce from this zone, and then you can trade from this area of value. So let's replay this chart. What you see that in this 15 minutes, the price, you see, first of all, with this gap, the price has been a bounce, okay? Now look at how the price is reacting to this level, okay? Let's continue to replay, okay? We saw that the price has broken this gap level and then see what happened, okay? You saw now the price has a strong rejection from this gap level. So once you have seen that gap level, the price penetrated this gap level and then broke above, creating a false breakout of this gap level. Okay, now let's see what's happening. Okay, you saw the price now consolidating along this, above this gap, and creating in fact an inverted head and shoulder pattern. You see, this is the head, left shoulder and right shoulder, and this head and shoulder is a bullish head and shoulder. You see the price completely created a upper right shoulder with a head and left shoulder here. Now as you see that the price, look at what is doing. Now you see the price again broke to the upside. Okay, now this market now is a strongly bullish market. Then every time you find a trading opportunity, buy and buy and buy. And let's see what happened next. You see the price aggressively pushed to the upside, and that's how you have to approach multi-time frame. When you see an important area of value, wait for the price to create a false breakout on the very lower time frame. Let's say a weekly gap level, wait for a false breakout on 15 minutes or 5 minutes and create a completely strong reversal pattern, and then you can consider buying from this market. Now let's see a couple of examples. Okay guys, so let's see this example on GBPUSD. This is the recent chart that you have already seen my analysis on GBPUSD, how accurate it came. Now let me explain how you can find a trading opportunity on this kind of pairs in even on the lower time frame on 15 minutes or 5 minutes. Now you see that GBPUSD for an extended period of time in a downtrend. This is the daily chart, and you see that the price was creating a series of lower high every time and pushing to the downside. Now at this point, what you saw that GBPUSD at the bottom. Now first of all, look at the bigger picture monthly. You see that monthly GBPUSD in a very bottom in an level of support. Now it's a strong downtrend. Now let's go to the weekly time frame. Now on the weekly, what you saw that you see exactly GBPUSD now on a very strong level of support. So from this support, there is a chance that GBPUSD will have a bounce. When you see the price approaching this kind of level, there will be a bounce, but this is an overall downtrend, bigger picture downtrend. So always think of, wait for the price to go an area of value for selling opportunity, not for buying. Now if you go to the daily time frame, what you are seeing that GBPUSD on the daily approaching a very important level of support. So where it should go the next you see this is where the next area of value. Let me replay the chart, then you will understand. The price penetrated. Now you see the price came to a very important area of value. This is the level. As you can see that there is a daily doji here. Okay, there is a daily doji here. So as soon as you open the chart, you need to draw this level, that area of value, daily doji, and also daily 20 period moving average. And this is an uptrending market. This level is very important, and you could see that exactly. Let me replay it again. Exactly, the price went there with this green candle and closed the candle. Once you found the price in an area of value based on higher time frame, step one, as I told you, is find the direction of the trend. So trend is down, only selling. Step two is to find an area of value. Once you found an area of value, the price in that zone, now go to the 15 minutes. Okay, now what you will do in this 15 minutes is, now you have to wait for a reversal pattern or a strong rejection. As you can see the price, you see this is still a bullish market in this important area of value. You will not do anything else. Replay the chart. Let's see how. See now slowly the price is trying to reject, but still it is a bullish pattern. Okay, you need to wait for a clear rejection from the top. Okay, creating a nice reversal pattern. Okay, so you see the price went above, penetrated all this high. Now let's see what happened. You see now the price is creating a pattern, now has created a reversal pattern. So what is that reversal pattern? You saw that the price in an important area of value in a daily doji as well as in a 20 period moving average in this zone. On the 15 minutes, you saw that the price has created a nice reversal pattern, broke above, came down, broke above, came down, created a double top formation with a lower high, penetrated all this high, created a false breakout. So you need to wait for a possible false breakout and also on the lower time frame and also a reversal pattern. And let's see what happened next. You see that the price didn't wait anymore. It strongly broke towards the downside, and that is where you will find a high probability trade setup. You see what happened? So that's what you have to wait for. Find an area of value based on the higher time frame and then mark that area of value, either a gap level or an important area of value, and then wait on the lower time frame to see proper price action pattern, either a reversal pattern or any kind of pattern that will give you confirmation for going short or long. And in this pattern, wait for a little bit of false breakout of previous zone that we have already seen. So let's see more examples like that so that you can reprogram your mind. Okay, so let's see this example on gold. You see, this is the weekly chart. This is also recent chart. The candle close here on the weekly time frame. As soon as the next week market open, you see there is a big gap opening happen. Okay, so let's first of all replay this completely and let's find out the gap. Okay, so now this is the weekly chart. Let's draw this weekly closing. This is where. Now go to the 15 minutes time frame. Let's see what happened. Okay, now if you go to the 15 minutes time frame, this is where the market closed the previous week. Now let's replay the chart. You see there has been a big gap opening here. You see the market opened here with a big gap and then went above to this level. And next what happened? You see the price strongly broke to the downside. So there is a big gap opening happen that you have seen on the weekly time frame. So go back to the weekly, see what it is. You see there has been a big gap opening happen. Okay, after this gap opening, the price tested this gap and then came back down. Now if you go to the 15 minutes time frame, what you saw like this. Okay, you draw this level. As soon as the market opened, you saw there has been a gap opening to the upside and then price came down. So this is a high probability trade setup because there is a gap has been tested and the price is now dropping. So if you go to the daily to see what's happening, you saw that on the daily the price in a very strong downtrend for an extended period of time, creating a series of lower high and lower low. Now let's repeat all the steps that we have discussed. Step number 1, find the direction of the trend. Trend is down. Step number 2, find an important area of value. You found that there is a gap opening on the weekly and also on the daily, and the price tested this top of the gap on the even any time frame on 15 minutes. If you look at, then you saw that the gap has been tested. You found the area of value, direction of the trend is down. You see, if you only look at the 15 minutes, it's basically an uptrend, right? You see that, oh my god, how do I sell? It's an uptrend. That's why you always have to look at the bigger picture. Once you have seen that all of this, you easily can trade short. Okay, maybe you can target even 1 to 5, 1 to 3 easily. It's achievable, right? The price aggressively moved down without any hesitation. So this is a really good trade even on the gold, and that's how you have to approach multi-time frame. So let's recap now step by step what we have learned so far. As soon as you open the chart, you sit on your trading desk. Step number 1 is find the direction of the trend. Step number 2, find an important area of value where the price is approaching. It could be a weekly, monthly or daily level, gap level, trend line, any kind of important area of value. Step number 3 is either you are trading in 15 minutes, 4 hour, 1 hour, no matter what, you have to wait for the price to come to that area of value, and will give you either a pattern on the very lower time frame or a price action on the higher time frame, such as on the 4-hour a pin bar, or on the lower time frame 5 minutes a reversal pattern, or a head and shoulder, or anything like that, with a little bit of false breakout of this area of value, and then this is where you will find the high probability trade setup. Hold the trade for an extended period of time, and then you can become a profitable trader if you repeat that over and over again. I sincerely believe that this video was helpful to you. If you find value in it, then don't forget to smash the like button and also hit that subscribe button if you haven't done yet.